this is Sean LaRue TV, another beautiful day in the desert. I'm going to be talking today to a bunch of real estate agents about what it really takes to get qualified in today's market. Not necessarily qualified, but what does it take to get the deal done in the mortgage market, and how do we navigate the mortgage market? And one of the things that I was thinking about was credit. And credit is really, really important. There are a lot of myths out there, and I just want to tell you what you can do or what you should look at if you're looking to get qualified. Okay? So what credit scores will actually qualify you? FHA will actually go down to a 620 FICO score. And most conventional loans, if you're putting 20% down, it's actually determined by the automated underwriter. So if you guys have pretty good credit, then or like a 640, it'll be determined upon your credit history and that kind of stuff. There's not necessarily a score that you have to hit. Now, it's a little bit different if you put 10% down because of the private mortgage insurance regulations right now. A lot of the private mortgage insurance carriers have actually changed their guidelines and shifted them a little bit. And if you're looking for 10% down, non-FHA, you're actually going to be looking at doing it as a primary residence. It'll have to be a primary residence to get the mortgage insurance. You're looking at a minimum of a 720 FICO score and a 41% debt-to-income ratio. Second homes, it looks here like second homes is also determined by the automated underwriter, so there's no really set credit score that'll qualify you, but it is a minimum of 20% down. And investment properties is actually a minimum of looks like 660, and so that'll be for an investment property purchase. And what are some of the credit myths? Some of the credit myths is that you can actually lower your credit score by running your credit report multiple times. Now, that is true if you run your credit report and actually open up multiple retail account cards, Sears, Macy's, the Buckle. You're going around to all the stores in the mall, opening up their trade lines and running your credit multiple times, and then you're going to buy a new car, running it for auto insurance, doing all that stuff, and then you run your credit multiple times for a mortgage. Yes, your score will go down. But if you're only running it and you're searching for a mortgage, it will not affect your score, and the credit bureaus actually look at that as one inquiry over a 3-week period, so you can run it multiple times. Collections, you should pay off your collections. If your collections are within a 2-year time period, you can actually pay those off and have your score go up. But consult your loan officer before you do anything on your collections for more than 2 years, because the credit scoring model is based off of a 2-year history. So double check that. Some of the myths regarding judgments. Any judgments or tax liens, you're actually going to need to get paid off and satisfied before you purchase a house. So, and it's going to be the same thing. If you have a house and then you had a judgment or a tax lien, you're going to need to satisfy those before you refinance and complete that loan as well. 30-day lates, if you have 30-day lates, are you going to be able to qualify? It really depends on the circumstances and how poorly or badly affected your credit scores actually are. And you can actually work with your credit companies to get items removed depending on the situation. Co-signed accounts, probably not very likely, but there are certain situations where we can do that. So what's going on with bankruptcy? I have another video, I'll put the link in there, I went in a little bit more about bankruptcy, foreclosure, and short sales. Bankruptcy will be on your credit report for 10 years. It affects your credit for only 2 years. And get good reestablished credit. If you have bankruptcy, get your credit reestablished as soon as you can if you want to buy property. Foreclosures stays on your credit report for 10 years. It affects your credit for only 3 years, meaning you can't actually purchase a property for Fannie or Freddie guidelines for those types of loans within 3 years. And same kind of thing with short sales. On your credit as a collection for up to 7 years, and it affects your credit for only 3 years. With FHA, we do have this thing called credit counseling services. If you put yourself into CCCS and you we're in the program working on debt management, debt settlement. You actually need to be in the program for at least 12 months to qualify for an FHA loan. So if you're thinking about doing debt settlement or you're thinking about getting involved in that program, talk to your specialized loan officer and find out what exactly they need to qualify you before you do anything. Also, if you're thinking about buying a car before you purchase a house, think about some of those items, because you can actually qualify for a house first and then buy the car once you have the house, and it might actually be a little bit better for you. Car repos with existing balances. If you co-sign for somebody's car and they had it repossessed and it's not your fault necessarily, you're still going to be liable for that. And if you have an existing balance on that, it's possible that you're going to actually need to work with them or get them on some kind of a payment schedule to help you qualify. So be careful of who you co-sign your cars with. And what can you do to raise your credit score? I've talked about this time and time again. There's a great opportunity out there to work with a rapid rescore and get your credit scores up. And one of the things you can do is pay off your collections within the first 2-year time period, like I mentioned. Pay down your high revolving balances. If you're maxed out on your credit cards, you need to pay those balances down to at least 30%, but I'm having the most success with people actually paying them off in full. Okay? So try to get those credit cards paid off. If you have a low credit score, paying those accounts off would really help. If you have a great credit score, don't worry about it. You're doing it right. Don't worry about, you don't have to worry about paying off those cards if you've got great credit, because you're already managing it correctly. Okay? Judgments. Get those judgments paid off. If you have multiple 30-day lates, there's going to need to be a reason or explanation. You may or may not qualify depending on how old those are, and if they're recent, you're going to have an explanation for that. But it all depends on what the overall credit profile is. And again, the 2-year history rule. So if you like this video and you want more information, please rate, comment, subscribe. You can subscribe to me right over here. And thanks for joining Sean LaRue Home Loans. I appreciate the follows, and it's another beautiful day in the desert. Thanks for tuning in, and I will see you soon.